times jump in EBITDA. What led to that kind of performance, and going forward, is that trend likely to sustain, not in terms of percentage growth, but in terms of the kind of profitability that you have reported?
Good morning, Anuj. Thank you. It is good to hear for the first time the anchor asking us that the improvement is there in their performance. So it's good to hear from you and getting recognized. Even in the last quarters, I had made a statement that the GMR is on the verge of turnaround. I think for successive second quarter, we have shown that continued performance, and hopefully this trend is likely to continue in the coming quarters as well. This has been achieved basically by the turnaround in the energy sector. In fact, if you can recall, whether it is our debt problem as well as our financial numbers, they were brought down by the negative growth and negative performance in the energy sector. You will see that after the increase in the debt, GMR has ensured that all our projects are now completely operational, and the results are now what they are showing today in front of all the investors and the public. I can just tell you some couple of the improvements in, for example, if you take our Yamco power plant, it has achieved an all-time high PLF of 83%. It achieved a revenue of 360 crores for the quarter, and for a half year it made a revenue of 650 crores. And EBITDA moved from 92 crores for the previous quarter to 130 crores for the half year period. You can see that. And most significantly, the Tamil Nadu power purchase agreement, which was stuck for a while, has already started, and we have started pumping in about 56 megawatt, which is likely to shoot up to around 160 megawatt in the coming few weeks. More importantly, we have started even recovering the dues from the distribution companies. For example, Maharashtra Distribution Company has already cleared about 72 crores worth of dues. So this has started in our cash improvement portion. Coming to Kamalanga, we have already achieved a PL of 68% for the quarter, and the EBITDA has moved from 133 crores, which was last quarter. Now for the half year, it is now 200 crores. Very significantly, again, the Bihar government, though the CERC approval is full to be approved, they have already accepted a partial jump of 13.8 paisa per unit, and that has already started. In addition to that, of course, flexible packaging, flexible restructuring package in both Yamco, Kamalanga, and couple of row projects are all there. So you will see that all around there is an operational improvement, and these trends will continue to be showing in the next coming few quarters and years as well.
Okay. Mr. Terdal, congratulations on what has been a good performance from my side as well. But for Kamalanga as well as the Emco power plants, what might the PLF be by the end of the fiscal?
Ekta, I am not able to hear. Can you repeat?
In terms of your guidance for the PLF, for the plant load factor for Kamalanga as well as Emco, where do you see it maybe by the end of FY16?
In terms of the PLF guidance, I guess this trend should continue in the range of between 70 to 80%. The PLF trend should continue.
For both plants?
Yes, please.
Okay.
One more important point which I want to draw your attention, Ekta and Anuj, is basically people were already asking questions on debt. So let me address that question straight away. See, in this quarter, in this half year from between March and September, our corporate debt has been reduced by as much as 450 crores. And you can see that in the interest cost, already there is a reduction of 33 crores for the current quarter.
Yes.
So you can see that the trend of reduction in the debt has already started. Okay. And most importantly, let me give you one number which will confirm what I am telling. Our net debt to EBITDA ratio for the year ending March 2015 was 15.50. But for the September half year, it has fallen down as much as about 400 basis points. Now it stands at 11.8. So you can see about 4 points reduction in net to EBITDA shows that our EBITDA has started improving, and as a result of that, our leverage position has also started improving very significantly.
Okay. No, that point is taken, Madhu, but it's still quite high, the interest cost component, taking away more than your EBITDA and leading to overall net losses. By when do you think you'll be in a position to report profit on a consolidated basis, on a quarterly basis as well?
No, it will be incorrect to talk about profit after 3 years of continuous stress in the power sector, Anuj. I think we should have some more patience when we really start seeing the results. But what is important?
Okay, so let's put it this way.
The trend of
okay, Madhu, let's put it,
cash losses.
Yeah, so let's put it this way. Let's put it this way in terms of reduction of losses. Will that trend continue, and by how much?
Absolutely. See, for example, the cash profit, which was in the last quarter 60 crores. Now this quarter, compared to the previous year of quarter 2 2015, our loss was 206 crores. But this quarter, we have achieved a cash profit of 134 crores. So this is a significant jump of 340 crores in 1 year time. And if you look at EBITDA number, it was 590 crores last year. This year it is 900 crores. It is a 52% jump in the EBITDA. So if you can see that the trend has started improving, so there is a significant reduction in the losses. There is an improvement in the EBITDA, debt being either constant or slightly more on the project debt, but corporate debt, which is the real cause of concern, has started showing the downward trend. I think these things will show that our health of the balance sheet, our health of the leveraging position has started improving gradually.
Okay. So, Mr. Terdal, if your interest outgo was low by 33 crores on a sequential basis, it still stood at 873 crores. How much lower do you think that you can reduce it in the second half?
As I was speaking that this year we have got a target to reduce our debt by at least about 40 to 50%. Without actually telling the numbers, Ekta, I can tell you that we are on target. We hope to achieve our corporate debt reduction to the extent of around 40 to 50%.
So can you safely say that your
what
quarterly...
level they were at March 15?
Can you safely say for Q3 and Q4, your interest outgo will be lower than this particular 873 crores that you did in Q2?
Yeah, without any doubt.
Okay.
Okay. Let's talk about your airport division. What's the update on that? Any plans to have any kind of restructuring there, or in terms of any kind of stake sale? We keep hearing about that. Anything planned in that line?
Airport sector, absolutely, there is no question of any stake sale at all. Both the airports are doing wonderfully well. This quarter results are slightly marginally down, basically because of the seasonal factors, but the airport as a sector continues to go a very robust health. If you have seen one of the major irritants in the tariff, which was in Hyderabad airport, that has been significantly, completely resolved now. As a result of that, in the quarter of ending this quarter, September, in the coming quarter, we will have a 90 crore additional revenue that is coming. And in the next whole year, the overall revenue should be jumping in the range of around 380 to 400 crores. So that was the most, because this has already been, DGCA has already approved Hyderabad airport to collect all the airport charges. So that has been resolved. And you will see a lot of developments in the real estate space in Delhi airport in the coming weeks. And already, if you see that already Delhi airport has achieved an EBIT of 800 crores for the half year. In terms of what you are hinting at, obviously we are looking at a sort of a fundraising at our GMR Airports Limited. And I can only say that GMR is pursuing a variety of options in terms of fundraising. And I will not be able to tell more details on that, but definitely you will see some amount of fundraising.
Any timeline or
the airport sector.
Any timeline or ballpark number if you could give us in terms of the fundraising?
No, we are looking at a significant money ranging from say for around 400 to 600 million dollars in the airport sector. But there is no fixed time limit because airport sector is a very attractive sector. The deal will be done on the terms which will be beneficial and attractive to the airport sector as well as GMR. But there is no pressure on us to do anything in a hurry. But importantly, if you have seen already, we had completed a very successful rupee bond a few months back, and we are looking at pursuing the government scheme of either masala bonds. Perhaps Delhi Airport will also be looking at the option of masala bonds as well.
Okay, one quick last question from my side then, sir. What is the status of the two captive coal blocks, Talabira as well as Ganeshpur?
We have already taken over both the mines, and in terms of the Talabira, entire machinery and everything has been mobilized. All the funding has been completed, and as on 3rd of August 2015, Talabira started operating, and already about 123,000 tons of coal has been produced till 31st of October 2015. And this will ensure that the first unit of our Chhattisgarh coal mines will get into production at a very, very short-term future. In terms of a few weeks, the unit 1 of Chhattisgarh should start the production.
Okay. All right. Fair enough, Mr. Terdal. We leave it on that note. Thank you very much for joining in and talking to us on a whole host of issues. That's GMR Infra. In fact, has spiked up to the high point of the day during the conversation that we had with the management. But let's get another.
The news point was this 400 to 600 million dollar being raised in the airport division, and that's really the big talking point now.
Yes.